Hi, what's up, Fast Track Property friends? Darren again. It is indeed an exciting start of the year with mega launches on the Momentum Park selling over 700 units to date, the Reef at Keppel selling over 76% or 327 units to date, and in the next 2 weeks, we will be witnessing another mega prime project by Gokuland Midtown Modern. This project is just seated above the Bugis MRT station. Now, since the 8th of February, there has been many news reports on a possible property cooling measures and a need to cool the private residential market. Okay, our DPM also warned explicitly that low interest rates can lead to distortions in asset prices and that there may be fresh steps to cool the housing market. I did a video on that and again put a link here for you to review on what could be the possible cooling measures if they are being introduced. Right, carrying on. Therefore, this brings many to conclude the possible downward adjustments in new launch prices and perhaps bringing down the overall price index into a bear market. These speculations has set off FOMO buyers rushing into the market. Now, the question is, are we really heading into the bear market? And if you're looking for your first property either for your own stay or just as an investment, how can you better prepare yourself amidst all this noise? Let's look at some research.
So over here, you can take a look. There's a few reports that has already stated there's going to be a rise of construction costs, and this pertains definitely to our property development, right? This has been reported in May 16, 2020. Thereafter, you have another one that's again reporting about the rise of construction costs, and this is in June 2020. And then late last year in December, another one states about the worry of the margins of labor rise, right? And this is reported in December. So therefore, this is nothing new. I think we all know that the cost of development has gone up because of labor, right? And this in turn would mean that there's already developers are selling their properties at very thin margins, and yet with this increase of construction costs that they have to incur, in my opinion, I think if they do want to reduce their price in terms of the units that they're selling, it will be very, very marginal, right? And I think they will most probably be holding on to their prices because they still have time to sell. They have 5 years to sell, right? And there's no need for them to slash the price so much. And if you've been keeping an eye on the news since November last year, you will also see that there has been an increasing uptrend of buildings being en bloc to developers. Let's now take a look. Here in November, you can see that there's 5 shop house for sale. And interestingly to note is that all these also has some residential elements. Yeah, this property could actually build up the rear area, right, to have residential properties. Yeah, another one here is landed properties up for sale, right? Again, this can be actually redeveloped because it's still Kurau. It's a mixed development in the area. It can be developed into a project that offers 24 new units, all right? And then obviously to close off last year, we had this Guillemard site that sold for 93 million, right? This has happened in November last year. And over here, you can see that they can actually redevelop this place to 137 units. Moving on, Lee Foundation has also sold their Hague Road property. These properties, again, could develop into low-rise apartments, consist up to 32 units at average size of 100 square meters plus minus, right? Then this year, you have, in January this year, you have Sherry Point in Newton up for collective sale. So this one could actually make build up to 36 units, all right? January again, Mount Emily has gone for a relaunch of sale. Yep, again another redevelopment. Fortune Park is very recent, it's just this month in March. Again, this could be redeveloped and they could build up to 88 unit apartment. Yeah. When I look at all this and then obviously following other reports such as they've increased, this is in December, right? They've increased the GLS by 70.2%. All right, and then this analyst has also stated that there is a high possibility that a new en bloc cycle is expected to take place this year in 2021. Moving on, again, another report says that this is going to happen. It might happen. All right, and if you've read the papers, the crazy thing is that first time in an OCRP area, Tanah Merah, just in front of the MRT station, there has 15 bids in fact, and for the first time, I'm guessing that this year a OCR property is going to be launched at around 1,700 per square feet. All right, this is really it's really high. Yeah, and here it states that private properties are going to rise in 2021 amid reviving economy. Okay, so I just got curious and asked myself, what is happening, right? Um, are we really entering a bear market or a bull market, right? So I got curious and I started to look at the surrounding data. This is what I got. Okay, what you see here basically is since 2016 all the way to 2020. We're looking at fourth quarter. Okay, what does total inventory means? This means what is presently in the market and has not been have not collected their keys yet. All right, so the volume here is as such, right? Over here it tells you that in 2017, there were 19,900 units that has been en bloc or under GLS, and this orange would mean that they are either going to get an approval from URA in terms of their plans, and therefore, if you add these two up, you will then fall into this inventory here, right? You add these two up, and then it actually falls into 2019. So this is what the orange represents. And you can see that in 2020, we do not have much GLS at the moment, right? And if you move on, this shows you the demand and supply. Now, what is demand and supply? The orange line tells you what is the balanced inventory. Okay, so at the end of 2016, the unsold units are okay. Unsold units does not mean what is in the inventory. Right? This inventory here would then represent what the units that are going to be released in the market for key collection. All right, and part of this amount here would then be the unsold units. So if you move on, here it will tell you that this is 19,000 units unsold, right? And this was a unit that has been sold for the whole year in 2016. And moving on, you have 10,000, 8,000, 9,000, and finally, for last year, we actually concluded a 9,982 units sold, right? And of course, in my earlier slides, as they add on new inventories in the en bloc or GLS, therefore, the unsold units actually shot up. And once you sell, obviously, it came down. Now, when I put all this together, is to give you a clearer picture, right? These are the inventories available. They had new units, you add on to it, it actually increases, and obviously the unsold units climbs up, okay? And then it comes down. Now the whole question is that moving forward, what is going to happen, all right? If they do not increase the GOS, and I think that there's a very high possibility, this is in my opinion what will happen, right? This is my estimate. If they only bring in the 4,700 units that's available last year to be part of the available units for sale, and if you will throw this into the unsold units, and if we did a 9,500 sale this year for the new launch, right, it would then bring at the end of 2021 a 19,496 units left unsold. Now, what would this mean then? This could actually mean what happened in 2016, where you would see a mega en bloc at what's this? At Shunfuville. All right, this was sold back in 2016 May, right? And over this here you can see that the break even was at 1250. Obviously today they're selling at 1,007 plus minus per square feet, right? So there is a very high possibility, I think, that this year could be a period whereby developers will be coming in for en bloc if the government do not release more government land sales into the market.
So where are we possibly heading? Bear or bull? In my opinion, if you have not set aside your family or property crisis fund, this should not matter to you because you will be putting you and your family in a high-risk position. Let me tell you a quick story. During the celebration of Chinese New Year, we like to play cards, right? So there is a game called In Between, whereby a player was given two cards, and if the next card drawn falls in between these two cards, he wins. And for this particular chap, he got himself an ace and a king. And the rules was, because of this particular hand, if the next card drawn was either an ace or a king, he had to pay up 10 times the amount he bet. Now, in a deck of 52 cards, the chances of winning is very, very high. And of course, everyone else at the table was cheering him on to bet everything in a pot because this is such a rare opportunity, right? If you don't take this risk, you may not get a better hand, and someone else could clear the pot. So we were like all those noise you hear in the papers, your friends, your agents. Because the real question was, can you lose 10 times the amount you play? Therefore, guys, if you're not set aside your family and property investment crisis fund, can you really take on the risk if the market does tank? What if you lose your job or your business drops 30 to 50%? Can you still afford to continue paying for the mortgage? Or are you just praying and hoping that you can make a quick flip in the next 3 years? In summary, from data and research, that if there isn't any more GLS coming in the market and as more of us gets vaccinated, it looks like 2021 is a year the world and Singapore is stepping into the recovery phase, right? And therefore the market should continue its steady and upward movement. And we seem to have already seen the early signs of developers coming in to buy old buildings, right, since the late of last year. And this may lead to another upswing. But guys, position yourself and your family correctly and invest safely, right, with a mid to long-term time horizon. All right? Again, I wish you all the best and I hope this information can assist you in your real estate planning. Till next time, take care.